Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 1st of November. It's been quite a positive week. Generally speaking, there have been two large factors at play in either directions. Having said all that, of course, markets have made some progress, and indeed the three main indices in the States, Nasdaq, S&P and Dow Jones, are either at or near closing highs at the current time. The positive influence over the last week has certainly been the strength of corporate earnings for the third quarter. That's been a theme on both sides of the pond. Offsetting that, we are of course aware of labour shortages and blockages in the supply chain, both of which have added to general inflationary worries. And it's now that we're moving into November, of course, it's largely expected that the Fed's tapering programme will be confirmed. So as a result of all that, as I say, the markets have made some steady progress. In the year to date, the Dow Jones is now up 16.7%, S&P 500 up 22.4%, the Nasdaq's up 20%, and our own FTSE 100 is up 11.8%. Turning to next week, the number of companies reporting on the calendar remains fairly brisk. A couple to look out for in particular. First one, BP has its third quarter numbers. Shares are up about 85% over the last year, perhaps not surprisingly given that the oil price is up some 63% in the year to date. It should mirror in that respect some fairly strong numbers that we saw from Shell. So look out for its cash flows, any reduction in its net debt and any mention of its plans on the dividend. The shares are currently yielding just over 4%, but from a historic point of view, that's relatively low by BP standards. We're also going to have a third quarter update from Next. Shares up around 32% over the last year. They've actually raised profit guidance this year 4 times, so they're clearly on a roll. So look out for full price sales and whether the strength of that has been maintained, not to mention, of course, its traditionally strong online presence. Also an update coming from Sainsbury, shares up 47% over the last year. Clearly there's been some M&A froth in the sector with the takeover of Morrison's. But in terms of Sainsbury, as we move towards the festive season, let's see if they come out with any comments on their own take on inflation, supply chain blockages, and indeed the ability to get staff for the festive season. There are also going to be updates coming in the UK next week from the likes of Standard Chartered closing off the UK banking reporting season, British Telecom, BT, IAG, the International Consolidated Airlines and owner of British Airways, and Flutter Entertainment. Thank you for watching. Have a great week.